A question, and I'll pose it to Kris. You know, when you take a look at the disparate performance in terms of the, outperformance of the mega caps versus, the other sectors doing terribly, are we not pricing in a soft landing? You see a soft landing. Are we pricing that in? Because if we are pricing that in, we should have the participation of the other groups in anticipation of that soft landing or the soft landing that we are currently experiencing.
Yeah, so I think over the past week, basically, this goes back to Chair Powell and all of his signaling to the market. The market got ahead of itself in terms of pricing in a cut in March. Our base case was always that the first cut was going to be in May or June, just because the growth, the data that we have and just the sheer facts around growth is strong. The employment backdrop is strong. So March was always going to be a little early for the Fed to be in a position to cut. So that pricing out of May and June, if we believe that Fed funds is at a peak, if we believe that the trajectory is lower in rates, if we believe that inflation is going down that trajectory to about 2.5% by year end, then that's good for the broadening out story. When and where it happens, we're going to need more visibility into the Fed's trajectory, though.
Timing is everything, though.
What's interesting
that's the tricky part.
The yields, the move in the bond market, Guy rightly talks about volatility, and you've had essentially a V shape in the long end yields over the last week. What was it? It was crazy that on the day Powell spoke and effectively was more hawkish than the market had expected, and the things that Kris is talking about in terms of pushing back rate cuts. But it's as if the market believed the Fed was going to push the market, was going to essentially keep their foot on the neck of the market that much longer and push us into recession. It was a move in the long end that actually didn't make sense, and that's the recovery we've seen.
See, it's interesting. I mean, the bond market is clearly confused because when you go from 382 a week and a half ago to 416 today, on essentially just a lot of rhetoric, I mean, the bond market's struggling to figure it out as well. I'm, I think, one of the few people that think rates can continue to go higher because I do think the inflationary pressures are going to start to reaccelerate. Now, I don't think that's particularly bullish for stocks, but quite frankly, nothing's been bearish for stocks now for quite some time.